Hello everyone, it's Johncross Moses-Madu from the Big Bank Forex Group, and I welcome you all to another video on my YouTube channel. I normally put out great content here on my YouTube channel to help struggling forex traders get more and more info or more and more lessons or tips on how they can better their trading strategies or better their trading career or learn more things to make sure that they get better in trading. Now, first and foremost, I want to appreciate you, everyone watching this video, whether you found me through YouTube search or whether you're in my Telegram group or whether you found me through any social media platform. I want to tell you thank you for watching my video. Thank you for taking our time to watch my video. You could be doing anything right now, but you are here watching my video, and I want to tell you that you won't regret, because I really put out great content that would really help you better your trading career. I really try my possible best to make sure I give value on every video that I put in my YouTube. So thanks for watching, and if you are not yet subscribed, please try and subscribe to my YouTube channel so that you can get updates on when I post a new video. Now, today I want to talk about a topic, or I want to answer a question that I've been asked many a times, which is, why do I trade long term? Now, I hear a lot of people say I'm a unique trader because I trade the market long term, or because I trade the day chart. I also hear people say trading the day chart is not advisable because you can lose a lot of money there. And I'm like, can't you lose a lot of money on the hour chart and the minute chart? Yes, you could. It all depends on your knowledge and your discipline, because it's not really about the time frame, it's about your knowledge and your discipline. So let's look at the charts and let me show you something real quick. You can see the price is moving currently. Now you can see that price right now is at 1.2638. Let's go to the 1 minute and see what price is right now. You can see that price is the same price on the minute, is the same price on the daily. 1.2637 or 1.2638 is moving. It's the same price on the daily, it's the same price on the 15 minutes, it's the same price on the 5 minutes, sorry, it's the same price on the 4 hour, it's the same price on the 1 hour, it's the same price on the 30 minutes, same price on the 1 hour, the same price on the 15 minutes. What I'm trying to tell you here is that one pip move in the day chart is one pip move in the minute chart, is one pip move in the hour chart. That is just what I'm trying to tell you. So if you gain 5 pips in the daily chart, you also gain 5 pips in the 1 minute chart, you also gain 5 pips in the 15 minute chart. So there's a slight difference between trading the day chart and trading the minute chart, and I'll tell you. For me, the day chart provides the best signals on where the market is going than other small time frames. However, on the minute chart, you have a lot of noise. You have lots of support and resistance levels on the market, on the minute chart, and it will be hard for you to determine which level is the strongest and which is the weakest. Now let's go back to the 1 minute chart and let's look for support and resistance levels. Let's do this. Now, if you are to shrink this chart right now to look for support and resistance levels, this is what you could do. We're trying to look for support and resistance levels on the 1 minute chart. I want to show you why I say that the 1 minute chart is too noisy. You have to be watching all these levels, and you won't really know which is the weakest and which is the strongest. Also put one there. Now let's go to the daily and see what we have. Look at what we have on the daily. Okay, let's zoom out a little. Let's zoom out a little to, you can see what we have on the daily. You can see for yourself what we have on the daily. The noise on the mini chart is way too much, and the support and resistance are also too much. So you can't really tell the levels that are strongest and the levels that are weakest when you are looking at the mini chart. You know, okay, let's also do this. Let's do this. Let's do this. Now if you check what I did right now, I just highlighted a zone. This is like a zone in the on the daily charts. This is just a zone that I highlighted where the market used as resistance. Now let us see what we'll be looking at on the 1 minute chart. And if you can see very well, the zone covered how many candles? 1 2 3 4 1 2 3 4 4 candles. Actually three candles. Actually 1 2 3. Let's see what we'll actually be battling with on the mini chart. Even when I zoomed in, so you can see, if this is what you're going to be looking at. This is what you're going to be looking at on the mini chart. Let's zoom out a little. This is what you are going to have to be looking at on the mini chart. This is what you have to be battling with on the mini chart. And that is why it can easily be faked out, because when you're in this zone, you could say, okay, I'll buy here, and the market might go a little bit down and fake you out. There are too many fake outs because the noise is too much, the candles are too much, and you won't really be able to get the best levels or the best setups when trading. You know, but if let me do this. Let's go out to daily chart. If I'm to place levels on the daily, just around this, you know, this is a tutorial just to show you guys some things. If I'm to place, these are major levels here around this level. These are the major levels. So let's go to the minute and see how significant these levels are. You can see when the market got here in a minute. You can see how the market respects it in a minute. From here, it gapped up. You can see how the market respects these major levels in a minute. You can see how the market respects it in a minute. You can't find major levels looking at the minute chart. You can only find them looking at the daily chart. That is one thing you must know. You can only find them looking at the daily chart. For more clarity, you can go to the 15 minute and see for yourself and see how the market respects it. The levels are placed on the daily. The daily candle gives you a better view of what is really going on in the market and areas that you should pay attention to the most. And you know, if I want to throw money away, I will go trade the mini chart. Now, no offense to those who trade the mini chart. It's just that it requires too much focus, and I love things to be less complicated. If trading the mini chart is more convenient for you, keep doing so. It's just that for me, I have more control over my time trading the daily chart. You know, I don't have to be looking at the chart all the time. I just look at the chart once or twice a day, because I look at the day count. I only look at one candle to give me reason to either enter, exit, or to know what's actually going on. I just need to see one candle to know what happened throughout a whole day. But looking at the 1 hour or the 4 hours, you have to look at about either for the 1 hour you have to look at 24 candles to know what's happening in a day, and for this 4 hour you have to look at 6 candles to know what's happening in a day. And the smaller the time frame, the smaller the time frame, the more candles you have to look at, which makes things more complicated and which decreases your understanding on what is actually going on, and which exposes you to the market makers. Because most times when you look at the small time frame, when you think that okay, the market is going up or going down, it might not really be going down, but because you're looking at the smaller time frames, you get confused and you only get lucky once in a while. So I've placed the support and resistance, and I've shown you the amount of data or info you tend to look at when you look at the 1 hour, 15 minute, and the 1 minute chart, because of that amount of data, you don't know how strong a particular support and resistance level is, and you can't easily predict if it will break that level or respect that level. Moving with the 15-minute chart. Now, looking at the way I placed my support and resistance on the daily chart, you can see that on the 15-minute chart, the other levels, this can serve as a level, this can serve as a level, this can also serve as a level, but the daily has showed us the strongest levels already, so we don't really look out for the rest, because daily has shown us the strongest levels, and that is the reason why another reason why I trade the daily. And from the daily, you can easily understand or check or determine if price will break a particular support, or let me say, you can easily determine if price will break a particular level or not when you're looking at the daily, rather than when you're looking at the minute or the 15 minutes or the hourly, because price could come here, test it, come down, test it again for like 5 or 6 times before dropping. And maybe or sometimes price could test it like here now. If you're looking at the 15-minute chart and price came to this level here and rejected, you might have thought, okay, price is not breaking, then the market might be going down. And what happened? The market went down 24 pips, but what happened later? Price broke through and went. And this is the disadvantage of looking at this lower time frame, because you won't be able to see what is really going on. Price here probably you'd have thought, and it even gave you an engulfing candle, that price is actually going down, but what happened? Price just went down a little and broke it and kept going up. So for you to know if the price will break a particular level of support, you can only really understand or know when you're looking at the big time frames like the daily chart. So as I said before, looking at the small time frames could make you you could be misdirected or misguided because of the small time frames, because as I told you, it has too much noise, too many candles, your eyes have to be everywhere. So for me, it's much better to trade off the daily, because all you have to look out for is support and resistance, pullback, price action. It's very simple, and I don't know why some people feel it's difficult, because for me it's really, really simple. If you need help on how to go about it, I could be of help. Trading off the higher time frames is by far easier for me than trading off the small time frames. And if you feel you need a lot of money to trade the big time frames, then I have to tell you that you don't need it, because whether you have $500 in your account, if you make 5 pips trading the hour, it's still the same 5 pips made if you are trading the daily chart. As long as your volume is constant, the profit is the same. And moreover, you stand to see a better view of where the market is going on the daily. If you are trading the minute chart, the market might leave support and only go up 10 to 15 pips before you get to resistance, and you might be scared that it might pull back and you will take little profits. Let me show you an example of what I just said now. Let's go back to the 1 minute chart. Let's go back to the 1 minute chart. Now, this is a level, this is another level, this is another level. Now, the market came here and used here as resistance, and what happened? It only came down. You can see 4 pips to the next. Before it could go down to the next support, it was just 4 pips. You can see that, just 4 pips to the next support. And by the time you place support and resistance everywhere on the mini chart, the market will just keep going from one weak resistance to weak support. And even if you are trading all support to resistance, you see yourself only getting a little amount of profit. You see yourself getting a little amount of profit because it might only take the market 10 pips for it to get to resistance, or 5-10 pips for it to get to support, and you might see yourself only gaining 3 or 4 pips. And most times when you now want to lose, you might be losing a much more bigger amount. So but on the daily chart, it might take the market like 100, or let's say 80, 90, 100 pips if it needs support for it to get to the next resistance. It's like the market's coming to support. Before it got to this next level, you can say 150 pips, and at this level you can see before it got to this level, it took like 100 pips. So you have the chance to gain more pips trading the daily than trading the minute and the hourly, because the daily gives you room to actually gain more pips. Which means if you trade a $200 account on the big time frame, you stand to make more money on a small volume than when you do so on a smaller time frame. So that's all for now. I hope I offended some of you so you can understand where you go wrong, because most times you have to be exposed before you can realize your mistakes. So I hope you take this to heart, and I hope I was able to add value to you. So that will be all. Thanks for watching. If you like this video, if you got value, please make sure you like the video, and if you have any topic that you love me to explain to you or to talk about, please don't hesitate to comment below, and I would do my best to make a video so that you can actually learn. And if you happen to disagree with what I said, you can also comment and give me a reason why, and give me reason why you actually disagree with what I said. So thanks for watching and stay blessed.